Okay, I'm really going to try to keep this video to 5 minutes, so I might be talking a little fast. We're looking at the hourly chart for the E-mini oil futures, okay? And we put on our trade tonight. We made some good little bit of money, and we're gonna talk about that real quick and talk about how we set this trade up, okay? So there's a lot to talk about in a short amount of time. So here we go. This is February 24th, 5 p.m. Sunday night. This is the opening for the week right here. 5 o'clock, 6 o'clock, 7 o'clock. Look at the 7 o'clock candlestick. Whoa, baby, whoa. This is a big, long candlestick. Obviously, it's red, meaning it went down. Okay. Here at H&J, we use a lot of tools and indicators to help us make trades. So for those that don't know, this is the Hall Moving Average right here. Obviously, red means down. We have the small red line is a 3 exponential moving average. The yellow line is an 8 exponential moving average. And we noticed on this hour that the 3 crossed over to 8. That's a big indicator for us. Also, we have this purple, gray, and light blue line is what you call a volatility band. And we noticed that this activity is occurring below the midline, the volatility band. That's also big for us. That's a big indicator for us. If we're buying long, above is better. If we're shorting, below is better. That isn't always the case, but in this case, it's significant, okay? So right on this candlestick, this is also what we call engulfing. So this candlestick is engulfing, the body of this candlestick is engulfing the entire body of that, right? It's on the outside of it. Here is above the body, this is below the body, okay? That's significant. But if that wasn't enough, we have this candlestick here, which closed below its open and closed below this close. So we call this a 3, 1, 2, 3, outside down. A 3 outside down, okay? So these 3 candlesticks together are significant. They're usually a fairly decent indicator that the trend is going down. It just helps confirm a lot of things, right? So we place a short trade on the hourly chart only, on an hourly basis only, somewhere between here and here. I don't remember exactly where it was, okay? But we picked up about 8 ticks or about 0.2 of a point. Because on this particular futures, I believe it's 40 ticks to a point, okay? So we picked up about 0.2 of a point. Now that may not sound like a lot, but it is a lot depending on how many contracts you have on. And we're not going to talk about exactly how many contracts. Doesn't really matter. The point is there's profitability here, and we made some nice money on it. Okay. Now, we got out. This candlestick already has turned green, but we got out when this candlestick was further down. It was red. Okay. So we picked up, like I said, about 8 ticks. And you can see now that this is turning, the 3 has crossed back over the HMA, and you've got some upward momentum going on here, okay? So so now you know how we set this trade up and how we decide to get in and get back out within 2 or 3 hours, okay? And picked up 0.2 of a point, okay? So why didn't we stay in this trade longer? A lot of people would say, well, you had red, HMA, Hall Moving Average, and your 3 is still below your yellow. Why didn't you stay in longer? Well, several reasons why you didn't stay in this longer. Okay. First off, you have to kind of know the behavior of whatever product or financial instrument you're trading. Now, we happen to know the oil futures as we get closer to midnight and 1 a.m. That Europe comes online. England, France, all these other countries over Europe, they come online. That's the beginning of their day. So you tend to get some behavior that's not always predictable. They don't always follow what you see in front of you, okay? So, we're at 11 o'clock, and we also noticed that momentum was going down here, and it started to touch the oversold, okay? And we kind of noticed that the price was beginning to stall, and this candlestick got really tiny, right? And it didn't expand. It just kind of sat down there in a really small body. There's a lot that goes into deciding when to get out of the position, but that definitely helps. So momentum's touching the oversold. We have a tiny body on the candlestick. We noticed the 3 MA is kind of just beginning to turn and come up, okay? And this may still come down. This may just come back up this and turn back down and really go down and pick up a whole point or more by tomorrow morning. It's possible. Well, I don't know that for sure, but it could happen. Okay. So, is that the only reason why we got out? The reasons I mentioned? No. On the daily chart, we still have upward momentum. This is a daily chart now. I'll switch over to daily. Okay. And even though we're seeing weakness on the daily as the momentum's beginning to turn over, there's still not enough indication here for us to believe that this is a shorting, that we should begin to short on the daily. You could to get in long, which I don't remember if we did, but we may have. We would have done that back here on the 14th because we have all the right conditions telling us to do that. Okay, but we're not going to get in long up here. This is a very high risk. That's why I got this box here, by the way. This dark box is high risk. And we want to thank Steve Miller and AskSlim.com and all the team over there for their help. You see we got cycle analysis on here going on. If you're not familiar with that, go over and check out his site, AskSlim.com. They got a really good service over there. You can go check them out, okay? So we do not... This helped us make the decision to get out of an hourly trade. Because this was red just 45 minutes ago. Okay, and it may come down tomorrow, like I said, or later tonight. But there's too much indecision going on here. See how this is all consolidated and things are just moving sideways? So there's not enough information here, enough data here, enough indication that this is ready to turn over. So we're not going to hold positions on the short side any longer than necessary. We're going to take our profits, in this case 0.2 of a point, and get out. Okay? So when would we have hold on to that position longer? Well, we would hold that position longer if the 3 was crossing over the HMA and over the 8 EMA. Then we would be aggressive on our short side trade. Like we could be aggressive down here on a long. You could get aggressive on a long down here. But you can't get aggressive up here on a long or a short. So if you're going to trade the hourly, don't get aggressive. Take what you can get and get out. Because there's way too much indecision and consolidation going on up here to holding the positions for a long period of time. Okay, so that's the reason why we got out of the short trade just after 2-3 hours, because the daily chart is telling us to be cautious. Okay, that's it. I did pretty good 8-minute video, and I hope you got something out of this video. We'll talk to you again real soon.